It's a feeling that's becoming all too common in Australia. You get to the end of the financial year, you gather your documents, you lodge your tax return, and you wait for that satisfying refund to hit your bank account. But this year, for millions of Australians, that refund is either dramatically smaller than expected, or worse, it's been replaced by a tax bill. You're left staring at the notice from the ATO, confused, frustrated, and asking yourself, what did I do wrong? Why do I suddenly owe tax? I've had countless conversations about this very scenario. It's a wave of quiet panic washing over middle-income Australia. People who have always done the right thing, paid their taxes, and expected a little something back are now finding themselves on the back foot. And the reason for this isn't something you did wrong, it's the result of a quiet rule change, a decision made in the halls of Parliament that is only now, years later, showing its teeth. The government quietly removed a tax offset that was worth up to $1,500 for over 10 million Australians. And the impact is a financial shockwave for households that were already feeling the pressure from the rising cost of living. This wasn't a secret, but it certainly wasn't shouted from the rooftops. It was a temporary measure that became a regular feature of our tax returns, and then it was gone. This is how the system can work against you, not with a bang, but with a whisper. A line item on a budget paper from years ago becomes a real-world financial hit today. And this is just one example. There are other quiet rules, other thresholds and surcharges that are lying in wait for middle-income earners ready to take another bite out of your hard-earned money as your income grows. But you don't have to be a passive victim in this. Understanding these rules is the first step to disarming them. In this video, I'm going to pull back the curtain on the specific offset that was removed and why it's costing you hundreds, if not thousands of dollars. I'll also show you another stealth tax, a surcharge that catches thousands of people by surprise every single year. And most importantly, I'll give you the clear, simple strategies you can use to navigate these traps, keep more of your money in your own pocket, and turn that feeling of tax time dread into one of control and confidence. Let's start with the main culprit, the one that's causing the most widespread confusion and frustration right now. It's called the low and middle income tax offset, or EDITORIAL for short. You might have heard it called the Lamington by some in the media. For 4 years, this offset was a welcome bonus for millions of Australians. It was introduced back in 2018 by the Morrison government as a temporary measure to provide some cost of living relief. It was a tax rebate paid out at the end of the financial year that was worth up to $1,500 for individuals earning between $48,000 and $90,000. If you earned between $37,000 and $126,000, you received at least a partial offset. Over 10 million taxpayers received it in its final year. It was always intended to be temporary. The plan was to replace it with broader tax cuts down the track. But then, as often happens in politics, the plan changed. The broader tax cuts were brought forward, but the EDITORIAL was kept in place, extended for another year, and then another. It became a regular feature of the tax landscape. People came to expect it. It was factored into household budgets. It was the little bit of breathing room that helped to pay for car repairs or a family holiday or just to get ahead on the bills. And then, on the 30th of June 2022, it ended. It was gone. The legislation that created it had a built-in expiry date, and the government of the day, the Albanese government, chose not to extend it again. Because it was an offset paid at the end of the year, the impact wasn't felt immediately. It was only when people started lodging their 22 to 23 tax returns that the penny dropped. The refund that was once there was now gone. For someone who had previously received the full $1,500 offset, their tax outcome was now $1,500 worse off. If they were due a refund of $1,000, they now had a tax bill of $500. If they were due a refund of $2,000, it was now only $500. It was a direct, and for many, unexpected hit to the household budget, and it happened without any fanfare, without any major public announcement. It was a quiet rule change that had a very loud impact. Now, you might be thinking, but I'm a middle-income earner. Surely this wasn't aimed at me. But the name low and middle income tax offset was a bit of a misnomer. The median, or middle income in Australia in 2020 to 21 was around $62,600. Someone earning $90,000 who received the full offset was in the top 28% of income earners. Someone earning $126,000 who received a partial offset was in the top 13%. This was an offset that benefited a huge swathe of working Australians, from nurses and teachers to tradies and office workers, and its removal has left a significant hole in their finances. But the LMI2 is not the only quiet rule that's catching people out. There's another one, a surcharge that can add hundreds or even thousands of dollars to your tax bill if you're not careful. It's called the Medicare Levy Surcharge, or MLS. We all pay the Medicare levy, which is 2% of our taxable income, but the MLS is an additional charge on top of the Medicare levy that applies to higher income earners who don't have an appropriate level of private hospital insurance, and the definition of higher income earner is probably lower than you think. For the 2025 to 26 financial year, if you are single and your income for MLS purposes is over $101,000, you will be hit with the surcharge. If you are a family, the threshold is $202,000, and that threshold increases by $1,500 for each dependent child after the first. The surcharge itself is between 1% and 1.5% of your income, depending on how much you earn. Here's where it becomes a trap. The income that the ATO uses to calculate whether you have to pay the MLS is not just your taxable income. It's your income for MLS purposes, which includes your taxable income, plus your reportable fringe benefits, plus your net financial investment losses, plus your net rental property losses, plus your reportable employer super contributions, plus your deductible personal super contributions. It's a much broader definition of income, and it's one that catches a lot of people by surprise. Let's look at an example from the ATO's own website. Tom is single, 35 years old, and has a taxable income of $90,000. He doesn't have private hospital cover. He thinks he's safe from the MLS because his income is below the $101,000 threshold. But Tom's employer provides him with a car as a fringe benefit, and the reportable fringe benefit amount on his payment summary is $27,000. This means his income for MLS purposes is $117,000. He is now in Tier 1 of the MLS and has to pay a surcharge of 1% of his income. That's an extra $1,170 in tax that he wasn't expecting. That's a significant hit, and it's one that could have been easily avoided. This is a classic example of a stealth tax. It's a rule that is designed to encourage people to take out private health insurance, but for those who are unaware of it or who don't understand how it works, it's simply a penalty. It's a tax on not having private health insurance. And as your income grows and you cross these invisible thresholds, you can suddenly find yourself liable for a surcharge that you never even knew existed. So what can you do about it? How can you protect yourself from these quiet rules and hidden traps? The answer is to be proactive. It's about understanding your own financial situation and making conscious decisions about how you structure your affairs. Here are some simple, actionable strategies that you can use to fight back. First, when it comes to the Medicare levy surcharge, the solution is straightforward. If your income is approaching the MLS threshold, you need to do the maths. Compare the cost of a basic private hospital insurance policy with the amount of the surcharge you would have to pay. In many cases, you will find that the cost of the insurance is less than the surcharge. By taking out a policy, you not only avoid the surcharge, but you also get the benefit of private health cover. It's a simple cost-benefit analysis, but it's one that can save you hundreds or even thousands of dollars. Second, when it comes to the broader issue of rising taxes and bracket creep, you need to think about how you can reduce your taxable income. We talked about some of these strategies in our last video, and they are just as relevant here. Salary sacrificing into superannuation is a powerful tool. By putting a portion of your pre-tax income into your super, you can reduce your taxable income and therefore the amount of tax you pay. Investment bonds are another excellent option, allowing you to build long-term wealth in a tax-capped environment. And for those with a mortgage, debt recycling can be a game changer, turning your non-deductible home loan into a tax-deductible investment loan. Third, and this is a crucial point, you need to be aware of all of your income sources. The ATO's definition of income is broad, and it's easy to get caught out. If you have a second job, or if you have income from investments, or if you are receiving fringe benefits from your employer, you need to factor all of this into your tax planning. You can't just look at your salary, you have to look at the whole picture. The ATO's online income test calculator can be a useful tool here, helping you to understand your total income for MLS and other purposes. Finally, and most importantly, you need to get the right advice. The Australian tax system is complex, and it's constantly changing. Trying to navigate it on your own can be a recipe for disaster. A good financial advisor can help you to understand your obligations, identify potential traps, and develop a personalized strategy to help you achieve your financial goals. They can help you to turn that feeling of tax time dread into one of confidence and control. They can help you to become the master of your own financial destiny. This is not about avoiding tax, it's about paying the right amount of tax. It's about understanding the rules and using them to your advantage. It's about making sure that you are the one who benefits from your hard work, not the ATO. The quiet rules and hidden traps are there, but they don't have to be a threat. With the right knowledge and the right advice, you can turn them into an opportunity to take control of your finances and build a more secure future for yourself and your family. If you're feeling overwhelmed by all of this and you'd like to have a confidential conversation about your own financial situation, there's a link in the description where you can book a consultation. We can help you to understand your position, identify your risks, and create a clear plan to help you move forward. And if you found this information valuable, please hit that subscribe button. We're committed to providing free, independent financial education to help Australians like you to build and protect their wealth. And if you know someone who needs to hear this message, please share this video. You could be saving them from a nasty surprise at tax time. Let's dig a little deeper into the psychology of this, because it's more than just money. The sudden disappearance of the LMITO feels like a betrayal of trust. For years, the government, through its actions, created an expectation. The offset became a reliable part of the financial year, a small but significant buffer against rising costs. To have it removed so quietly, without a clear and upfront public information campaign, leaves people feeling like the rug has been pulled out from under them. It creates a sense of uncertainty and cynicism. If a benefit that 10 million people relied on can vanish overnight, what other financial certainties can we no longer count on? This erosion of trust is corrosive. It makes people less likely to engage with the system and more likely to view the ATO not as a neutral administrator, but as an adversary. And the Medicare levy surcharge is another perfect example of this adversarial relationship. It's a policy that is, in effect, a penalty. It's a tax on not having private health insurance. But it's framed as a surcharge, a technical term that obscures its true nature. The thresholds are not indexed to inflation, so just like with bracket creep, more and more people are being pushed into paying it every year. A couple with a combined income of just over $202,000, a very common scenario for two professionals in a major city, will be hit with a surcharge of at least $2.020 if they don't have private hospital cover. That's a significant amount of money, and it's a decision that is often made without a full understanding of the consequences. People are busy, they have mortgages to pay, children to raise, they don't have time to read the fine print on the ATO website, they rely on the system to be fair and transparent, and in this case, it's not. This is why financial literacy is so important. It's not about becoming a tax expert, it's about understanding the basic principles that govern your financial life. It's about knowing what questions to ask, it's about being able to spot the red flags, it's about having the confidence to challenge the status quo. The system is not going to change, the quiet rules and hidden traps are not going to disappear. The only thing that can change is you. You can choose to be informed, you can choose to be proactive, you can choose to take control. The strategies we've discussed today are not just about saving money, they are about reclaiming your power. They are about sending a message to the system that you are not a passive participant. You are an active, engaged, and informed citizen who is determined to build a secure financial future for yourself and your family. And that is a message that is worth sending. Before we finish, I want to leave you with one final thought. The Australian tax system is one of the most complex in the world. It is a labyrinth of rules, regulations, and exceptions. To navigate it successfully, you need a guide. You need someone who knows the terrain, who can point out the traps, and who can help you to find the most direct path to your destination. That's what a good financial advisor does. They are your guide, your partner, and your advocate. They are the person who can help you to make sense of the complexity and to create a plan that is right for you. So, if you are feeling lost or overwhelmed, don't be afraid to ask for help. It could be the best investment you ever make. Thank you for your time. I hope this has been valuable. Remember to subscribe for more insights into protecting your wealth, and please share this with anyone you think might be at risk of these quiet tax traps. Knowledge is the best defense.